Good morning, everyone. Welcome to the official YouTube channel of Officers at 24/7. My name is Amanjot, and I am here with all of you to discuss the another session on the Indian economy and Indian financial system. So, first of all, a very good morning to all of you. And let's start the session. Before starting the session, if you have not downloaded the 24/7 application yet, then do download the application because here you will get all the upcoming batches detail. You will get the quizzes of your related subject. Everything will be available here. And then if you have not subscribed the channel Officers are 24/7, then do subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. Okay. Now let's start. In today's session. We are going to talk about the instruments of money market. So we are not going to cover the whole instrument in the one class, but yes, we are going to cover the instruments of money market. So before coming to the money market and the instruments of money market, what is the money market? Let's understand what is money market and it's a part of which type of market. So first of all, if I talk about money market is a short-term market. First, when we talk about money market is regulated by RBI and it is a short-term market. Short-term market means less than 1 year. This is a market in which only 364 days trading will be done. It means money market is a market of short-term financial assets which can be uh, easily converted or which is we can say low substitute of money. So what is money market? Money market is a financial market, or we can say that money market is a market of short-term financial assets. Short-term financial assets which are close substitute of money, which are close substitute of money. Now, what does it means? First of all, money market is a market for short-term financial assets. Short-term means less than 1 year. It means only for 364 days they have a maturity period. And this is the market of short-term financial asset. And these short-term financial assets are the close substitute of money. It means these instruments can be easily converted into money. Okay, you can easily get money after converting these instruments. So this is what the short-term financial assets means. And these instruments, what we are talking about, short-term financial instrument, these we have. First, we have call money, we have notice money, we have term money. Then we have commercial papers, certificate of deposit, tree bills. Tree bills are also known as treasury bills, cash management bills, then collateralized borrowing, lending, obligation, etc. All these are the instrument of money market, or I can say all these are the short-term financial assets which are close substitute of money. Clear? Now, all these instruments are part of money market, and we are going to discuss today these three instruments, that is call money, notice money, and term money. So let's start and see what are the types of money market in India. These are the types of money market in India which we have already discussed. Now let's start with the call money. First of all, when we talk about the call money, in call money, there will be a interbank transaction. In call money, what we are having? We are having a interbank transaction. Now, what does interbank transaction means? It means simply the transactions which are happening between the banks. So when one commercial bank giving loan to another commercial bank, that will be known as your call money. Okay, that will be known as your call money. Clear? Now, the duration for this will be overnight duration. The duration will be overnight duration. Overnight means 24 hours. So when banks are giving loans to each other for 24 hours, that market instrument will be known as call money market. Okay, it will be known as call money market. Screen problem. What is the screen problem? Let me know. What is PNB? PNB is giving loan to Axis Bank. This is known as your call money. Okay, next. Notice money. Now, what is notice money? If I talk about notice money, it is also the same. In the call money also, in the notice money also, there will be a interbank transaction. There will be a interbank transaction. It means in notice money also, the banks are giving loan to each other, but the duration will be different. And the duration for this will be your 2 to 14 days. It will be 2 to 14 days. So when banks are giving loan to each other for 2 to 14 days, that will be known as notice money. So for overnight loan, we are talking about the call money, and for 2 to 14 days loan, it will be known as your notice money. Okay, it will be known as your notice money. Now the third one is term money. Under the term money, again the interbank transaction will happen. It's also an interbank transaction. And this interbank transaction duration will be your more than 14 days. It means from 15 to 364 days. From 15 to 364 days. So when banks are giving loan to each other for 15 to 364 days, that will be known as term money. This is known as what? Term money. So we have discussed call money, notice money, and term money. In all of the three instruments, banks are giving loan to each other. The only difference here is that the duration for call money will be overnight, the duration for notice money will be 2 to 14 days, and the duration for term money will be 15 to 364 days. Okay, so that will be your call money, notice money, and term money. Okay, next. So now if I talk about banks are giving loan to each other, so there is certain important thing which we have to discuss, and that is this: कि when banks are giving loan to each other, let's say there are commercial banks, they are giving loan. There are commercial banks, they are giving loan to other commercial banks, like interbank transaction is happening. So they are giving loan to each other. Now, what rate of interest will be charged? Like if I talk about RBI is giving loan to Government of India, so RBI is charging bank rate or repo rate under the ways and means advances. Second, if RBI giving loan to public, RBI charging bank rate, repo rate, marginal standing facility. Now, when banks are giving loan to each other, what rate of interest they will charge to each other? And that is known as your MIBOR and LIBOR. That is Mumbai Interbank Offer Rate and London Interbank Offer Rate. So when in the Indian interbank market, in the Indian interbank money market transactions are happening, the rate of interest will be known as your MIBOR, Mumbai Interbank Offer Rate. When in the global market there is an interbank transaction happening, that will be known as LIBOR, London Interbank Offer Rate. But now this is a very important information that this LIBOR has been replaced. It has been replaced by alternate reference rate. So now now London Interbank Offer Rate is not going on. Now we are using alternate reference rates whenever the banks are giving loan to each other at the global level. Okay, like PNB is giving loan to Standard and Chartered Bank. Hong Kong and Shanghai Banking Corporation giving loan to, let's say, for example, Yes Bank. So these are the global banks which are transacting with each other in the call money, notice money, and term money. And the rate of interest, it used to be London Interbank Offer Rate, that has been replaced by the alternate reference. Okay. Now, what is MIBOR? First of all, it stands for Mumbai Interbank Offer Rate. You can see here, MIBOR is the interest rate at which banks can borrow funds in marketable size from other banks, but in the Indian interbank market. So in Indian interbank market, when banks are taking loan with each other, that is known as Mumbai Interbank Offer Rate. Rate of interest will be charged. Now, MIBOR is calculated every day by the National Stock Exchange of our country, that is NSE, as a weighted average of lending rates of a group of banks on funds lent to the first class borrowers. So here, what MIBOR will be there, what rate of interest will be charged by banks with each other, that will be decided by the group of banks. That is the 30 banks which is involved under this group. This will cover the public sector bank and the private sector bank also. These 30 banks group decide on funds lent to the first class borrowers. According to that, they decide what rate of interest will be there that can be charged from each other. And that is changing every day. MIBOR is calculated every day under the National Stock Exchange by the group of banks. Okay. Now, if I talk about London Interbank Offer Rate, this is LIBOR. And LIBOR as the average interest rate estimated by leading banks. Who is estimating it? Leading banks in the London, that they would be paying if they borrow from the other banks. Okay, so this is the rate of interest which will be estimated by the leading banks of the world, and that rate of interest will be charged by the banks to from the another banks who are borrowing money with each other. Now, one important thing is that London Interbank offered rate, better known as LIBOR, was, it means it's not working anymore, was once the most important benchmark interest rate for setting the price of overnight and short-term loans that banks make to each other. Now, this London Interbank offer rate has been replaced with the alternate reference rate. The reason behind it is what? The reason was that this leading banks was doing something wrong. They were not following the standard. They were making the rate of interest as per their benefits. Like whenever they want to have loan, they already reduce the LIBOR's rate. Okay, when they don't have to take a loan, they increase the rate. So this misconduct was happening in the rate of interest discussion by the leading banks. That's why LIBOR has been replaced, and the inspection of the on the LIBOR is still going on. Okay, that's why it has replaced, and now it will be known as alternate reference rate, which will be charged by the global banks with each other when they are providing loan facility to them. Okay, so this is what we have discussed under the LIBOR and MIBOR and the call money market. So first of all, we have discussed what is money market. Then we have discussed what is your money market instrument. Then we discuss the call money, notice money, and term money in detail. And then the last, MIBOR and LIBOR. Okay. So I hope all the terms concept is clear to all of you. If you have doubt, you can ask right now. Or if you're watching the video after it ends, you can also ask in the comment section. So now, right now, what you can see here, the from the 13th of January, from 13th of January, we are starting a new target batch, that is a 2.0 target batch of JIB, that is starting from 13th of January. And in this particular batch, I will be starting Indian economy, Indian financial system, and the principles and practices of banking from 13th of January itself. Okay, so do not forget to join the particular session live, because in the first 1 week we will having a understanding of the subject. Okay, and right now 78% discount is going on. By using a code Y496, you will get this benefit. Next, apart from that, there is a JIB, CIB, Mahapacks are also available. The difference between Mahapack and Target Batch is this. In Target Batch, you will be getting only the conceptual classes of the subject. But in the JIB, CIB, Mahapack, you will be covering the conceptual classes, the revision classes, the numerical batches, the case study batches. Even after that, you will get the MCQ batches also. Okay, everything will be available in the JIB, CIB, Mahapack in next 2 years or 1 year, whatever maturity of your product is. Whatever batch will be introduced, that will be added into your account. Okay, it will be covering CIB, all compulsory elective paper, as well as if you are going with the JIB, CIB, Mahapack or the CIB, Mahapack. Now, to enroll in any of the Mahapack, you can use the code Y496, and the code will give you the 78% discount. Now, how to enroll in the JIB, CIB, Mahapack or in any particular target batch? For that purpose, you have to go and download the application, because from the application you will be getting 1% additional discount there. So you have to go to the application and find the JIB section. Here will be the JIB section available. So if you want to go with the target batch of the JIB, click on the JIB 2023. If you want to go with the Mahapack, you can click here. So the JIB 2023, you can see these are the all batches which are for related to the JIB 23 preparation. There are individual subject batches, there are combination subject batches, and there are full length batch that will be covering all the 4 subjects. And this is the latest batch which is starting from 13th of January. That's the English medium batch. You can see the Indian economy, Indian financial system. I will be starting from 7 a.m. to 8 a.m. from 13th of January, and the PPP will be from 9 to 10 p.m. Now do read all the details. After reading all the details, you have to click on the buy now option. Okay, where you have to click? You have to click on the buy now option. 1 second. And this window will open in front of you. Here you have to add a code, that is Y496, and click on the apply. When you apply, you will find here 77% discount is going on right now. 1% additional discount will be available from the application. The price you have to pay will be for 4300 or 4400 something to get the 6 months validity of the JIB, all 4 subject classes. And the more best option from this will be your Mahapack. You can go with the JIB ka Mahapack or JIB CIB ka Mahapack. Both are available here. So if you want to go with the JIB ka Mahapack, that will be covering everything which related to the JIB. And if you go with the JIB and CIB Mahapack, that will be covering CIB batches also. So let's say, for example, you want to go with this batch because after enrolling in the JIB, CIB Mahapack, you don't have to go anywhere else. You will be capable of qualifying the JIB as well as CIB in a single pack. So the 12-month validity is available. All the JIB subjects, CIB compulsory elective subject, everything will be available. Revision batches in the future, MCQ batches in the future, case study batches in the future, numerical batches in the future. Everything will be available. E-books, test series, everything will be available. Now, how to enroll? You have to enter a code Y496 and click on the apply. When you apply, you will find 77% discount it is showing, but 1% discount will be available from the Adda 24/7 application. Don't worry. It will be covering JIB and CIB both exams for the 12 months validity. The code to get the 78% discount will be Y496, and the price you have to pay is around 12,300 or 200 something, and you will get both the exams content. Okay, and not only the conceptual classes, but everything which is required to qualify the exam will be covering in the JIB and CIB Mahapai. Okay, so this is the information for all of you. I hope the money market instruments are clear to all of you. In the next class, we will be coming up with the other instruments of the money market. Okay, don't worry about it. So let's end the session here. Last but not the least, if you are new to the channel of Officers at 24/7, then do not forget to subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. Okay? Sorry. So let's end the session here. Thank you for joining the session and have a very great day. Take care all.